Hello everyone, welcome to all of you. Am I audible? Hi, hello. I am waiting for your message. Okay, thank you, Shubham. Yes. So let's start. Thank you for joining this session today. So today we are going to start a very important journey, the journey of understanding technical analysis. So this session is specially designed for beginners and also for those who have tried trading but still feel confused about the market. So before starting, I have some points. So I want to discuss with you all guys. Most people enter the stock market with excitement, but after some time, you always look into your friends. They feel confused, frustrated, and sometimes even scared. Not because the market is bad, but because they don't have the right foundation. Means uh, market. It doesn't mean market does not punish beginners. It means lack of knowledge. So we here I just share my knowledge and experience with you all of guys. This course is not just about trading. It is about learning how to make better decisions. Means after learning from here or any other platform or from this platform, it helps you understand market behavior, avoid emotional mistakes, manage risk properly, and build confidence step by step. So technical analysis is not only a trading skill. By learning this skill, it's a decision making skill. Means after learning this trading or technical analysis, you can reach up to the mark where you can take all decisions related to entry point or exit point. So in today's session, we are going to build the foundation. By the end of this session, you will clearly understand what technical analysis is, how price behaves, how chart works, what candlesticks means, and how traders actually read the market. Let me clear some common myths about trading. Means, you, before starting, you are aware about some myths around your home or friends. Many people think trading is gambling, but trading is not gambling. Gambling depends on luck. Trading, but here, trading depends on analysis and discipline. Means what you decide when and what you watch, and it's completely dependent on your skills and knowledge. And there is another myth like trading gives quick money. The truth is, trading gives money only when you have patience and proper learning. Without proper learning, you enter in trading. It's completely means if you earn some rupees, it's by luck. It's not by your knowledge. And there are another more one more myth is if you use indicators means you see on YouTube videos and other Instagram stuff. Um, if you use indicator, you will make profits. I don't think so, because but because indicators are just tools. It helps to get the entry. It gives you confidence. Means it gives you another reasons to enter in the a specific point or exit at the specific point. But without knowledge, tools are useless. So today, I request you to stay focused and follow this session step by step, because what we are starting today, it's not just information, it's a foundation building. Means before build a building, we have to set the foundation. So by uh, giving 2 hours, you just build the foundation for the next trading stuff. So beginning from the first slide, a beginner's blueprint to technical analysis. So here, what is blueprint? Anybody tells in the comment box what is blueprint? Means a blueprint means a plan before action. Like before build a building, an architect first creates a blueprint. In Hindi we call naksha, like mapping. Without a blueprint, the building will not be strong. In the same way, before trading in the market, we need a clear plan and foundation. This is what technical analysis gives us. Technical analysis helps us understand price, patterns, time. And when we understand these three things, we can make better trading decisions. And today we are learning these all things. Now let me explain technical analysis with a very simple or real life example. Let's take example of food street dilemma. Means let's imagine a simple situation. You go to a new city and you visit a food street. There are many food stalls. Now the question is in your mind, how do you choose which stall to eat from? You want to spend some money on food, and there is a dilemma in your mind. What what's the good food? Where we can get the good food? So there are two ways. First method is your you check everything, ingredients, quality, reviews. You study details before choosing. In trading, this is called fundamental analysis. There are two types of analysis: fundamental and technical analysis. Here, this is the this I contrast with fundamental analysis. Now, second method, you simply observe the crowd. Where is the higher crowd? Where is the lower crowd? You see which stall has the longest line. Means where's the longest line, and you assume if many people are standing there, the food must be good. So this is called technical analysis. In the market also, we observe what people are doing. We observe price movement. Means technical analysis means understanding what the crowd is doing by studying price charts. So there are two types of uh, analysis. First is technical analysis, and second is fundamental analysis. And throughout the journey, we more focus on the technical analysis. So technical analysis is very important for the short-term traders. Means by using fundamental analysis, we we found the best stock. But by using the technical analysis, we can see the where's the entry point, where's the exit point. So in next slide, we see two distinct approaches to the market. First, means we just clearly make the difference between fundamental analysis and technical analysis. In the market, there are two main approaches, as I already said to you: fundamental analysis and technical analysis. Let us understand both. Fundamental analysis studies companies' data, profit sheet, balance sheet, business performance. Means their qualitative data and quantitative data. Qualitative data means about their company's product and company's owner, and how politically their owners are. And second is technical analysis. Means for this when we use fundamental analysis, it's to find the real value of the company, and it is mostly used by the long term investors. And now technical analysis studies price charts, market trends, historical movements. Its goal is to find the best entry and exit points. As I already said, fundamental analysis is used for the to find the best stock, and technical analysis is using for the to get the exact entry point and exit point. It is mostly used for the short term trading, called as short term traders. But remember, these two methods are not enemies, they are complementary. Fundamental fundamental analysis helps technical analysis, and technical analysis helps fundamental analysis. So there are these professional traders and successful traders, we can say, that often use both. If they want to plan a trade for the long term, so fundamentally they also check the uh, means balance sheet, cost sheet, income statement, all this stuff. And technical analysis, or they use for the entry and exit point. Now let us talk about the reality of being a technical trader. Means here there are 4 points: holding period, returns, risk management, the commitment. So many beginners think trading gives fast money, but reality is different. Yes. Uh, Let us understand the real truth. First point is holding period. Technical trades usually last few minutes, few hours, few days, few weeks. Means uh, before investing your money or before investing your capital, you always choose the time. For means if you want to invest your money in any trade or in any stock, you are always think for how much time I have to invest my money in single stock and multiple stocks. So from here, there is mainly a short term strategy. Means second is returns. Initially, beginners made a mistake that they expect higher profits, but reality is something different. Do not expect big profits quickly. Instead, the goal is small profit but with consistency. Here in short term traders, consistency matters. And third is risk management. If a trade starts losing, means you just enter in the trade with the long position. Long position means you assume that price should be go higher, but it it goes against your direction. Cut the loss in that condition. Cut the loss immediately. Never hold a losing trade, hoping it will recover. Fourth point is the commitment. The commitment means technical analysis is not a get rich quick method. It's not a kind of this scheme. It demands learning, practice, and strict discipline. Means if you already invest your time to practice lots of charts and with discipline, and your learning time is more and more, and your focus is more, then for you can get rich, but with some time. So now let us understand why technical analysis works in different markets. The means simple the universal language of price. Technical analysis is called the universal language of price. Why? Because it works in many markets. For example, you also see in this slide stock. It also works in the stocks, commodities, foreign exchange, bonds, fixed incomes, cryptos. In stocks means take the example of Reliance, MRF. In commodities, take the example of gold, silver. In foreign exchange, take the example of currency pairs, means USD, INR. In crypto, take the example example of Bitcoin, Ethereum. So these are the examples of uh, this technical analysis mechanism, where we can use the technical analysis in variety of segments. All these markets have price movement, and technical analysis studies price movement. Means it's like we can uh, contrast with example, it's learning driving. Means once you know how to drive, you can drive any vehicle. In the same way, once you understand price movement, you can analyze any market. Means if you understand the technical charts, price behavior, where the demand, where the supply, where the resistance, where the support, you you apply these all skills, all this knowledge in this, in the stocks as well, in the commodities and foreign exchange, even though in the cryptocurrencies also. So next slide, there is a four pillars of technical theory. So technical analysis is based on four pillars. First, here you saw, you see market discount, everything. How is greater than y? Price movement moves in trends. History repeats itself. So starting from the first point, markets discount everything. Means all news, information, and expectations are already reflected in price. What this means if you see, there is a time of war, and due to this war market goes down. Means we already know, due to this war, crude oil is uh, not transport from from Iran to India, or it's difficult. Means as compared to previous situation, it's difficult now. So it's difficult for all of world. So here it reflects in the market, trading market. Means if you pick up any share means Reliance. Took the example of a Reliance and MRF. You see, where the war is beginning, from this point, their share price is down, going down, and due to this, market discounts everything. Means market share price absorbs all kind of news, information, and global expectations. And second point is, how is more important than why. We focus on only how price moves, not why it moves. So means we we don't we do not interest in the uh, we do not interest in the reasons. We just focus on how market is behaving, how share price is moving upward or downward, it's sideways. And these all uh, what we discuss in the next point. Price moves in trends. So what it means? Markets do not move randomly; they move in trends. Upward move, downward move, there is sideways move. Means in this you will see, uh, after learning this technical analysis, there is a kind of there is a three types of moves. First is upward move, second is downward move, and third is consolidated move. Let we see in the live charts. Like we took the example of gold, uh, XEU USD is forex. Here you see, so here is the upward trend you see in the charts. Is the upward trends. So here you see is the sideways, sideways. Means we just in sideways market. So you see here's the downward trend. So means you have to see, there is a three kind of uh, directions. It's upward, it's downward, it's sideways, and it's upward. So we also discuss in the uh, detailed way in next slide. So fourth point is history repeats itself. Means we also include the human emotions like fear and greed. It's never changed because emotions repeat, price patterns also repeat. Why we call emotions repeat, price patterns also repeat? Because market share price means any share price of any company, it absorbs all these things. Markets means human psychology, human emotions, and all kind of news informations and global expectations and all kind of geopolitical tensions. It already reflects in the share price because it absorbs. So now we are going to understand one of the most important concepts in trading. That concept is called OHLC. Means there is a candle and four characteristics of candle is opening point, higher point, lower point, and closing point. So we discuss with we also discuss on the live charts. And in the market millions of trades happens every single day, but we cannot analyze every trade. So we can simplify all the data into four important price points. So there are 4 points: opening point, high point, low point, and close point. So this is called OHLC. Let me explain each one. First is here. First is open price, as you see here. So there is a open price. Opening price means the first price when the market starts trading. So take the example of Indian market. Indian market opens at 9:15 a.m. and closing at 9:30 p.m. Sorry, 3:30 p.m. So we took the example of day candle. So let's see on the charts. So here's the day candle, means day time frame. We also talk about time frames. So the example of time. So here you see on your screen Wednesday 15th April 2026. So here you can see, opening point, higher point. Where is my mouse point? You see opening point, higher point, lower point, closing point. So have a look on this candle. Wednesday 15th April 2026 is in red color. Opening price means it's 4849. Means here's the opening price. This is all explanation. So there, that's the closing price. So here's the opening price and that's the closing price. Means opening price means the first price when the market starts trading at 9:15 means today opening price is 4851 opening price and closing price is around higher price means where the market is closed at 3:30 p.m. During throughout the day means there is low point and here's the high point. High means high price means a highest price reached during that time period and lower point means the lowest price reached during the day means you can see here this is the wick. There is a wick. You can see with circle. That's the upward point and that's the lower point. There is the lower close means you can see in that candlestick there are four characteristics. It's one is opening price, second is closing price, and third fourth is higher point and lower point. Because it's closing price here in the candlestick opening price and closing price is more important where the market starts, and each point is very important to understand the market behavior because it shows the final decision of the market. Just like in cricket, the final score matters most. In the same way, close price matters most, and opening price is also matters most. Now we come on the evolution of chart. How price is displayed on chart. First is line chart. It's the basic method where we can only see the closing price, not so much data, not getting the so much information by seeing this line chart or bar chart and candlesticks. So a line chart shows only closing price, as you uh, see in this slide. There is we can see only opening point and closing price. It connects closing price into a simple line. The chart is easy to understand, but it is incomplete because we do not. It doesn't show the opening point, high point, lower point. It shows only closing point. And second is bar chart. Bar chart shows complete OHLC data. Means it's as you see in this uh, in this photo. Here is the opening point, closing point, lower point, and higher point. This gives more information, but bar charts can look complicated. Third is Japanese candle. Japanese candle is the gold standard. It means where you see any trader looking on their screen, as you see, they just analyze these candles. These charts shows also same opening point, closing point, but here is the solid point. Solid point means uh, solid solid point means it defines the volume in the market. Volume means more number of buyers. If the more number of buyers and more number of sellers, you can easily buy anything, and in that market you can easily sell anything. But in this is a visual way. That is why candlestick charts are called the gold standard. So most professional and successful traders use these kind of candlestick charts to understand the market behavior and price patterns. And here we get also want to know the where we get this gold standard means the a centuries old methodology. Many people think candlestick charts are modern tools, but actually they are very old. Candlestick charts started in 18th century in the Japan. Means there is a rice trader named Homa Monisha creates this method. He noticed something very important. He noticed that price moves not only because of supply demand, but also because of human emotions, especially fear, greed. Later, it in the 1980s, an American trader named Steve Neeson introduced candlestick charts to the Western world, and today candlestick charts are usually used all over the world. They are still the gold global standard. Now let us understand the structure of candlesticks. There, here you can see candlesticks. There is the day candle. When this market now market gold goes down from this point to this point. Here is the time frames: 1 minute, 3 minutes, 5 minutes. But these shorter time frames are used by scalpers, means, means professional traders, and another is 15 minute, 30 minutes, 1 hour. This is little bit you more longer for the trades. So let us move to the next anatomy of the Japanese candlestick. This is very important in our whole chapter to understand the candles. So first is here, opening point is here, closing point is here, higher point is here, lower point is here. Means as you see, there is common points are high and low in the same two candles. But opening and closing points are different in these two candles. What it means and what makes this difference? If opening point is 2 rupees here, 2 rupees. Let us 2 rupees, here is 4 rupees, here is 5, is means if we assume the day candle of the Nifty 50, Nifty 50 means top 50 stocks of Indian market, and we consider the example of Nifty 50, and it's the day candle, means it's for the day candle. All right. So for the day candle, opening price is 2 rupees and closing price is 4 rupees. Means closing price is greater than opening price. If the closing price is greater than opening price, then here winner is buyer. Means in any candle you can see there is a battle between buyers and sellers. So here in this candle, if buyer is winner, then this candle is in green color, as you see here. We took the example of Nifty 50. So here's the day candle. As you see, where's the green candle? Green candle means buyers winner. It's a battle between buyers and sellers. And another candle is sellers. And another candle is of sellers. Where closing point is closing price is greater than the opening price. Here's the opening price. Opening price is 2 for closing. Sorry, means opening price is same 4 rupees. Here closing price is and lower point is means opening at the higher price but closing at the lower price. Means they here who's the winner? Seller is the winner. And this shows red color. Means here you see opening price is 25. This is the candle of 19th Feb 2026. Opening price of this candle is 25,873 and higher point is 25,885 and lower point is 25,388 and closing point is 25,454. So as you see is Here we see these points from here, from these points. Means if you want to see the OHLC points of 19th Feb 2026, you can see from this bar. Opening price is 25,873, high point is 25,885, and lower point is 25,388.75, and here you see closing point is 25,454. If you want to compare 2 points, opening points and closing point, closing point is smaller than opening points, means who is the winner? Seller is the winner, and this shows red color. And now we understand the decoding the body and the shadows, and let us also see the role of these wicks. We choose another pen. So, as you see this 31st of July 2025 candle, and you see this wick, these point, this one. So what's the role of this wick? Means there is a huge pressure applied by buyers up to this point, but here who is more stronger is sellers, because sellers don't want to, seller just push the buyers here, so market just hit this point and return to same way, return to the same point. So let us start the decoding the body and the shadows, what it means. A candlestick has two main parts. First is real body, as you see here. This is real body. The real body is the rectangular part. As you see, there is the rectangular part in the middle. It shows the difference between opening price and closing price. If the body is long, it means strong movement. If this body is longer, and means it's a strong movement. If the body is short, means it's weak movement. Let we see in this chart. This there is a longer body, means there is a longer movement, strong movement. Okay, uh, right? And there is another point here, as you see, is just little bit body, rectangular body, means weaker movement. And second is shadow. Shadows are the thin lines above and below the body. Upper shadows show highest price reached due to buyers, this point, and weaker lower shadows which price were rejected. Every candle tells a story between about buyers and sellers. Means who is the winner, buyer or sellers? Even it's 50-50. Means draw match. Now we have to understand the metrics of time frames. So now we talk about time frame. A time frame means the duration of the candle. As you see here, the four kind of uh, charts. It's monthly chart, weekly chart, daily chart, and intraday. Intraday means 5 minute chart, 3 minute chart, 1 minute candle. So monthly chart means one candle represents one full month. In weekly chart means one candle represents 1 week, and daily chart means one candle represents one whole full day, and intraday charts, one candle represents minutes. So here we take the example of 5 minutes, 15 minutes, 1 minute. Smaller time frame means more data. Smaller time frame means more data. Here you can show where is is there any no point where market goes in any direction, upward direction, downward, and sideways. So smaller time frame means more data, and larger time frame means less noise. It's We took the example of monthly, day candle, weekly candle. So is the larger time frame means less noise. Choosing the correct time frame is very important for traders. If they want to if they want to invest for the higher time, means longer time, so they choose day candle, weekly candle, monthly candle. If they want to invest their money for the shorter time, they just choose lower, shorter time frame. So another candle is uh, so another slide is signal versus noise. Means in the market, not all price movement is important. Some movement is useful, some movement is just noise. This is called signal versus noise. Let us understand two types of noise, two types of traders. Means first is long term traders. They prefer weekly charts, monthly charts. Means their capture is means capture the big trends, big moves. For and if they choose the higher time frames, higher charts, they press in this. Why they choose higher time frames? It's less noise and more clarity. And second is high frequency trader. They prefer 1 minute charts and 5 minute charts. Their main goal is capture small movements. Their benefits is quick entry and quick exit. Exit means their execution is so fast. If they want to enter in any trade, they just have to click by they have just to apply the market order just by using one click and enter in the market, and by using one click exit from the market. A successful trader knows what is signal and what is noise. So you have to very clear about the signal versus noise. If there is a higher noise means there's there's two kind of traders. It's first is high frequency trader which just uh, taken the trade on the candle basis, just means higher candle, bullish candle. And there is another kind of traders, the long term investors. And last is architect checklist. Now let us summarize today's learning. Think of yourself as an architect. Before building a house, an architect checks everything in the same way. You have, if you want to plan any trade, you have to check all these things which we will discuss. First is universal application, second is strict, means you have to discipline with your strict risk rules, and third is OHLC foundation, and fourth is the visual wedge. An architect check everything in the simple means a trader also needs a checklist. First is universal application. Technical analysis works in all markets, stocks, forex, crypto, commodities. Means um, if you will learn the technical analysis, you can apply it everywhere. Just you have to understand the market structure. There are different structure for the stocks, there are different structure for the forex and crypto. Second is risk rule. Always manage the risk, never hold losing trade hoping for, and never hope for the recovery. Like if you want to enter in the if you want to plan a trade, and there is a 10% of the there is a 10% risk, and against the 10% risk, at least you have to get the reward at least of 20%, means in 1 ratio 2, or means in 1 ratio 3. Means if you getting the 10% loss, against the 10% loss you have to get the 30% profit. Here's the risk reward management, we called as risk reward management. And with the passage of time, with learning and experience, you can master on these kind of things. Second, always manage risks and never hold losing trades. And third is OHLC foundation. Every chart is built on opening price, high price, low and close. Means you have to analyze each and everything. If there is a higher rectangular body, which we already discussed in the previous slide, if there is a higher rectangular body, means higher stronger movement. If the lower rectangular body, it's the um, low low weak movement. You have to understand from these kind of things. And there is upper shadow and lower shadow. You also have to see the upper shadow means upper line and lower line. So today we have built a strong foundation. So today's session was just the foundation. In the full course, we will go deeper into candlestick patterns, support and resistance, trend analysis, risk management, real market practice. And if you want to learn trading in a structured way, this course will help you build that strong foundation. And you can also check this course on Vertex EdTech platform, where you can see the full course and full syllabus, which will you cover in the full course. So thank you.